Hey everyone, I'm here with Howard Chan of KURV. Hey Howard, how are you?
Great. Great to be here, Oracle.
I'm really surprised you accepted the invitation. You know, back in the day, I really didn't want to interview anyone. And I used to say, look, if these guys want to come on my channel, I want 1,000 shares of their stupid fund, and I'm going to make it public. I'll pay taxes on it and everything. And then, well, I had Jay on from Yield Max twice, and he was a good sport. And I learned a lot about these funds, and I'm heavily invested in yours, especially now. Okay. And I love Curve. You're very, very different. Um, where do you want to begin? What makes you, let's start with this. Okay. You handle your trading now, don't you? It used to be Neos, but you took it
That's
over,
right.
didn't you?
Correct. So we're managing and executing all of the options, actually any securities that are in all seven of our ETFs right now. Yeah.
That is epic. And that's been going on for how long?
The reorg, if you were a holder, you would have gotten a proxy vote. The reorg concluded November 13th. So November 18th, that Monday, was the first day in which all seven ETFs were under our trust and we're managing all of the trading execution and portfolio management for all of the ETFs, KURV ETFs.
Well, your execution has been excellent. We even look at a day like today where the markets are heavily down, and I look at your. I don't really want to talk about competition, but the only other fund like your NFLP is NFLY. Okay, we look at it there, and we look at you guys. This is just right out of the gate. Now, if we look at Max all time, 44% premium, and I want to know from you, okay? And meanwhile, they lost from their opening price. Now, when we look at dividends really quick, I look at your competitor, okay, and their Nefli, okay, hold on, where is it? I have to make your screen a little bit smaller. Okay, so their Nefli paid 58 cents, and your Nefli paid 85 cents. I'm not even going to talk about Tesla or Tesla yet. But so tell me, what is it that you do different writing a covered call fund that gives us this massive? You know what? Let me just tell you right out of the gate. I don't believe, and this is all my people know this, I do not believe in the way total return is calculated. I believe when it comes to ETFs, it is total return is your NAV price first. Okay? And then we can talk about your distributions as your distributions. And however it works out, it works out. But if your NAV is losing money over time, Howard, can you tell me how does that happen with the same underlier where one fund is just degrading and the other is just growing and doing better and paying better yields?
Yeah, so when we launched these ETFs, we were really taking a sort of an institutional approach. So a lot of our backgrounds is we worked with some of the largest pension funds and endowments, and quite frankly, they've been using cover calls to generate additional income in their portfolios since the 80s. We wanted to bring that sort of disciplined practice into an ETF format so everybody has access to it. But we wanted to keep that institutional approach. And what that is that we do take a balanced approach between price appreciation and also income generation. So one of the things that I think many people are attractive to about these ETFs is that traditionally when you get income, you are getting interest payment from bonds or dividends from stock, and those are generally taxed at ordinary income, a higher tax rate. But with options, you're generating capital gains. So short-term capital gains is taxed at an ordinary income, but you have this ability to potentially get a long-term capital gains. But in capital gains, you that price appreciation and income, in terms of how you view it, is both additive to the performance. So where we differ is that we write calls on a monthly basis, which is generally a little bit longer than what the market is doing.
That's what I wanted
And
to
we
hear.
write it a little bit out of the money because with these stocks, these technology stocks, they tend to whipsaw,
Yep.
right? So they can
Like
up.
Tesla.
Exactly. And so we want to write the strike in a way that if the stock were to and we've seen this actually in October and November when the stock goes up 15%, we can capture most of that upside appreciation while harvesting the premium from the call, right? We want to, have that balance. If we wrote shorter calls, weekly and closer to the money,
And that's what your
when
competition is doing, right? Am I right?
yeah, other folks are doing it differently.
Yeah.
The stock will hit the strike, right? And then you lose out on the price appreciation, but also now the call is actually in negative territory. So we want to, the timing is, and then is an art. We look at historical performance and kind of decide where that sweet spot is. But ultimately, we want to be able to generate both price appreciation and income return. And when that happens, you have more. Your NAV will go up. And the one thing I do want to clarify, and because it's always we want investors should have the right expectation. I think the worst is you say something and it doesn't happen, and you kind of lose trust in your investor, right? So these funds do have track and underlying, right? So if the stock goes down, you should expect these funds to go down a little bit less, because when you write a call, you have actually
But
less
we all know
sensitivity.
that already, Howard. Let me
But
help you.
yeah,
Let me interrupt you and tell you exactly. I don't mean to interrupt you, but I'm sure the community wants me to. Okay? Here's the bottom line. When we got into these funds, we were introduced by another company that offered us high yield. Okay? High yield. We became yield whores. Okay? And we're proud of it. We're degenerates until we learned, well, about NAV. And let me ask you point blank as a fund manager, is NAV erosion a real thing or not? Yes or no?
NAV erosion is a real thing, and
Okay. Wait,
yeah,
one next question. Okay. NAV erosion, as your capital begins to get smaller, do your dividends get bigger or do they get smaller?
they get bigger because your denominator gets smaller and your numerator stays the
No,
same.
no, we're only talking
Yeah.
in dollars. We're
Okay.
in dollars and cents, they get smaller as the
Oh,
NAV shrinks. Would you agree?
correct.
Okay,
Yes.
so the loss, the gain of dividends does not compensate for the loss in NAV, correct?
Correct. In most cases, yeah.
What causes NAV erosion other than the obvious, which is a bad underlier?
It's when you over distribute. So when the simplest example I give, and I think people really kind of understand this, is, when you have a real estate property, like some of us, some folks have a rental property,
Oh, I know what you're going to
right?
say about the kitchen.
And you're tenant and you expect maybe 2,500 dollars worth of rent every month, right? And then so that's your steady income that you get, right, every month. And then one month your tenant maybe is a bit late, right? But you want that 2,500, but you want to, no matter what, you start selling pieces of your kitchen. So you're actually destroying value of your house. And that act is sort of NAV erosion.
Mo-
Um,
Most people, let me jump into this. Most people come into this blind, okay? They'll see it on YouTube, whatever. They will not even know about ex dividend date and what that means. Okay, they are used to stocks which pay quarterly having an ex dividend date, and then yeah, it takes a long time, but they always recover the dividends. There's never erosion. In these funds, the more frequent they pay, especially the single payers, okay, the more likely they are to have NAV erosion if they pay out more than they actually earn. And the reason why many companies, I think this is my opinion, would pay out more than they actually earn is to entice new investors to come into the fund, like a
the
marketing thing.
problem is that that's not sustainable, right? So one of the things we want to do is for our funds to be able to generate, this is the descriptor, sustainable income from the underlying.
Yes.
And so going back to what I've mentioned is that we want you to have good going back to the analogy I have, we want to have you provide good income, but we also want you to capture the increasing prices of your house, right? We
Right.
want both.
Right.
So
That's
that's
great.
where we differ a little bit. So, it doesn't make sense to destroy your house prices just to get that rent every month. We think that there is a sweet spot where you can capture, and I want to caveat this. A cover call strategy will limit you're trading some of the upside
Of
for
course.
income. So we want to capture not only the income, but when your house appreciates, we want to capture a portion of that as well. So you kind of have best of both worlds.
Capture. Let me tell you, I invest not by the number of shares. I focus on the dollar amount. I think I put $125,000 into NFLP, right? You guys nailed it on earnings. And I was able to capture $13,000, rip it off to the top over and above what I put in, and then still get a massive dividend on 3,800 shares worth of about, I think it was 80 cents a share. So it was a fabulous performance. Okay, and before I'm going to get into earnings, I want to talk about Tesla coming up, TSLP. A lot of people want to know, okay, because you're trading now. We like your strategy, and we've seen how you planned for. We might as well just jump right into it. We've seen how you planned for Netflix earnings. How are you going to plan for? And then I want to go back to the house analogy. You know what? Let me throw it out real quick. People need to understand if you're getting a $5,000 dividend, it's like owning a house and you're collecting $5,000 rent. But here's the catch. The value of your property every month when you collect rent goes down by $5,000 and the neighborhood has to increase by $5,000 in order for you to actually earn that rent. If not, what'll happen is every month the value of your house will go down by $5,000 if you are not recovering the dividend. Isn't that a great way to put it? Does it
Yeah.
make
And
sense?
there's only so much of your house you can sell to get that income. So you have to be careful.
Pe-
So
People are blinded by yield when they come here. I call it, I hate to say it, the poor person's paradox. Okay? What happens is it's like the lottery. The people who can least afford to buy lottery tickets are like the people who least can afford the high yield traps and that look for that. So I call it the poor person's paradox until you come to an awakening. When I first looked at your funds, I was like, oh, these don't pay enough compared to these other funds. And then I looked over time and I became a believer. I don't want to be flipping in and out of these funds all the time. Another issue that was brought up was low volume. And Marshall and in client services spent, I mean, so much time sending me detailed emails about how it really didn't matter. Okay, you guys have great market makers that fill the orders, and I've experienced it myself. So, can you explain to people in a short, simple layman's term how the volume, and it is increasing, by the way, congratulations, but the volume doesn't really matter, and the AUM doesn't really matter other than to anyone than the people running the fund because they got to pay the bills.
yeah, we're a little bit cursed by the style that we are managing these funds with, which is that we look to generate consistent monthly income. So we know even the first folks who invested in us, they tend to buy and hold. And so volume is generated by both volume of buy and sale. So
Trading.
we look at a stream, yeah, it is a bit lower. But you have to keep in mind that first of all, this is actually part of the design. We picked these six names is because these are the largest companies, right? The trading volume of the stocks is some of the highest in all of the global markets. So these are extremely liquid. And then we're doing options on the most extremely liquid names. So these assets are not like bonds that you never trade and don't have prices. You have prices on these options and the T-bills, which is also another really extremely liquid instrument in the portfolio. So we do monitor the bid-ask spread for all of our ETFs, and we look at what is fair value in terms of quote on that spread. And generally, they are actually in line and sometimes tighter than what the underlyings are. So in terms of liquidity getting in, hopefully you don't get out, it's fair. And then on top of that, is that um, we work with our market makers to make sure that at every day that the pricings is correct. If something looks a little bit off, we will go talk to them, and then we generally have not really seen you know the bid ask spreads to be unreasonable, and they're
I
actually pretty.
found them to be fine, and I told you. I mean, I've bought like $50,000 at a time. You know, the only thing that you need to watch out for is you don't want to buy in the first 2 hours or in the last 2 hours of the day at random, and you don't want to place a big order at one time, like $150,000, and kind of spook the market makers. You want to go in like chunks, like 50 grand at a time is fine. I've had no problem with that, and your volume is coming up. Have you noticed?
Yes, and this is a
You're
little bit of
welcome.
thank you. This is sort of a little bit of an unsolicited advice. In general, when you buy ETFs, we would recommend that you don't trade the first 2 hours, like Oracle said. It's because overnight there's all of these limit orders that execute really indiscriminately in the first, hours of trading.
I
We
love
also
dumping on
recommend
people
that
at the
you
open.
and we also recommend you don't trade in the last 2 hours of the market close because and this is true of most ETFs is that the we the people who can get shares from our ETFs directly are the market makers, and we close that an hour before market close so we can execute our trades in the funds. So generally you can see that the bid ask actually widens out in the last
Yeah.
hour of the market. So you don't want that's not ideal pricing either. We typically see the better execution is to use a limit order about 1 or 2 cents below what the bid ask is during the day where it's the most trading liquidity across. This is true across most ETFs. So that's generally how we see good execution being done.
Okay. Okay. The other thing that we like about your funds is that they have a low maintenance. Okay. On because it's I know it's terrible, but we're margin whores. We love to go all in on margin, and I teach my people the difference between buying power and buffer. They need to stack their ETFs properly in their portfolio so they can stack buffer on top of buffer. And the buffer is the key that keeps away margin calls. Okay, and people love to do this. Whether it's you can frown on it if you like, it's okay, but people love to do this. And so you guys have relatively low maintenance, which is great. Okay, and I like holding the funds, but I showed you my portfolio. I have about 5 positions that kick off massive yield. Now, and I like to have very few positions. Why do I have 5? Because I'm trying to replicate what I like from the Mag 7. Okay? I know you probably got some breaking news for me. We're going to get to that in a minute. Remind me if I forget. Okay? But when we look at all of these funds, I love all of them. Let me just, a quick, before we jump on them, right here. Okay, we look at this. Netflix, max time up 44%. When we got into these funds, you know what we wanted, Howard? We got into them because we were growth people. But then we found this wild yield. So we wanted the yield. We sacrificed some of the growth. But we never said they could take our capital. Okay, the way we look at it is I give you $100,000. Okay, I expect you to be able to trade for me. Okay, and add to my money. We should be able, if we're going to take the risk and pick single stocks, we have to pick properly. We need the proper momentum and everything else. Okay, but when you get a fund, let me not even go there. So we have that, right? So let's look at Tesla, right? Tesla in the last 6 months went what I would think is perfect for a covered call, up and to the right. Okay, that was the underlier. We never compare covered call funds to the underliers, but we compare covered call funds to covered call funds. When we look here, yours over max time is up and to the right. You've paid out really well, and we gained $4.51. They're 18%. That's great. We look at other funds that are managed differently. Wow, they reverse split and they lost 67%. And now they're paying less than you are. So when we come back to KURV, what I want to know is, is that strictly because you're only paying out what you earn? or and I know you hold some back because I seen the higher payments at the end of the year, which is great. Some people may not agree with holding some back, but at this point you are paying out a good amount and giving us everything we've ever wanted. What do you think about that? This is what the people want.
Yeah. So one of the things I do want to just be very precise. Looking at the price chart doesn't include the income you get, but we do monitor that very closely because I think in the market, at least dividend investors market, there's this assumption of reinvestment,
Oh,
uh,
terrible.
which which if you don't reinvest, then actually you don't get that same total return that a lot of people are
No, no, no,
talking.
no, no. Let me interrupt you here because this has been a
Yeah.
big point of contention here. Okay, we begin with your NAV. Everything else you're supposed to earn and pay us. It should never come out of our NAV. Okay, so our way of looking at total return in this new paradigm is NAV first. That's the return. That's competition against competition. Who's out trading who? And then we add or look at the yield and look at that separately. But it's NAV first nowadays because people come here. I did another interview with another fund manager, and I was heavily at 26,000 shares in something else, and it was a covered call fund, and they were able to trade everything. Okay, and they had a new prospectus, and they could do straddles, they could own the underliers, they could make money long, short, or neutral. And I'm a trader. I understand that. And they continuously lost money. But I asked the sub advisor who's running the fund. I said, "How much would I have to reinvest to keep my capital flat?" He told me 100%. Even if I have to give you back 50%, that is too much. People get into this and they talk about the income, Howard, right? So if they talk about the income, that means I should be able to take it and the fund should be able to recuperate and I can live off that money. And maybe if I have to reinvest 10 or 20%, maybe 10%, that's acceptable. But in an ideal world and a new paradigm, I should not have to put that money back to stay flat. And you're giving us growth. What do you think about this?
Yeah, so that is actually pretty in line with how we manage the distribution. So as you kind of referenced it, we have this sort of imaginary bank that we have in the fund. When we write cover calls and we get that premium on the calls, we our intention is only to distribute that minimally, right? If we have more gains during a year, that's extra bonus. It's like sort of the cherry on top that we can distribute. So in that bank, if it's 1 month that where we get more premium than we expect, maybe volatility spiked, implied vol spiked, whatever, we'll hold some of that back in the bank because we want to keep it for a rainy day where maybe vol falls very low and or we don't get as much premium in the market. We can then use that reserve in the bank to at least to maintain some sort of consistency in distribution. Now, in a fund, for instance, like Tesla or some of the names in last year in October and November, where we had a huge amount of price appreciation, and we can capture some of that because our call is a little farther out.
Yes.
Those when we have those are sort of for us cherry on top, and we hope investors don't mind if we distribute more than that consistency. So there, when we have gains, then we then push that out as distributions. So you can see that some of our distribution is elevated towards the end of the year because we just were able to capture, a lot of the gains from the risk on
So,
environment.
so the money from your so-called bank winds up being distributed to the investors anyway. Like I noticed that near the year end last year, your payments started accelerating. That's an example of that, is it not?
Yeah, so we were able to capture the price appreciation, and then we distribute that out to the investors of the fund.
Hey, on a side note, everyone, Howard was a little bit nervous. Okay, he thought that this was going to be a conversation about the interview. And he had like his backup people there and everything. He must have watched my videos. I told you it'd be okay. Anyway, how you doing so far? You all right?
This is great.
This is
I mean, I love explaining how our strategies work. It's just, I feel the more information you have, then the better decision you can make for your
Right.
portfolios.
And I've watched all your other videos, and I wasn't going to come in here and have you tell me about how you play violin with your friends, and that's your freak off. It's playing violin and jamming with your buddies. So we left all that out. All this the Swiss small talk. We're not in Switzerland. We don't need that. We jump right into it. Okay. So you're defeating NAV erosion. You know it exists, and you are doing everything you can to defeat it. Is that the answer? Yes or no?
Yes, we
Okay.
are guarding
Good.
against Navarro.
Now I'm going to hit you hard. You ready for this? Okay.
Sure.
You ready? All right. KQQQ in the modern paradigm for everyone sucks. And I have to say that because people get all excited when they look at the names, and I'm an expert on it. Okay, not everything in the Qs is technology stock like Costco and things like that. And so you wanted to eliminate all that, squeeze it into basically a growth fund that's only technology and the best of like the Nasdaq 100. Am I correct so far? Right?
Yeah,
And,
the
and pay out a
largest
premium.
yeah, right. Yeah.
Okay. Your premium sucks. That's the problem. Now,
Yeah.
to us, because again, I want to use the term we're yield horse. Look where we're coming from. You've seen Misty and all that kind of stuff. So when we look at this, we're like, oh, this is like a Warren Buffett kind of thing. It's an old paradigm. We don't like this. So okay, that I'm going to ask you, and there's everybody stay till the end because we're going to break some news here. Okay, that is going to put KURV even bigger on the map. All right? Remind me, Howard, don't let me forget because I don't have a good memory. Anyway, it's all the ETFs and the crypto. Everything's driving me nuts. Look, everybody wants you to come out with like a Y mag and all that. And I'm supposed to ask you because everybody says, oh, tell us where you're working on. That's all the dumb YouTubers. I would be like, hey, listen, tell me what you got approved by the SEC and you haven't released yet. So before I get into this, tell me that. What do you got that you haven't? What's up your sleeve?
Uh, we actually and I have to be we actually can't talk about it because we will be filing some new funds, but maybe not in the asset classes that you're thinking of.
Oh,
We
I got
could,
asset classes for you that are going to blow you away. You might have to pay me for this one. This is genius. Nobody else has got it, and it's in demand. So there's nothing, wait, you're saying to me that there's nothing like, let me show you a little back pocket action right here, okay? This is our friends over at Round Hill. Let me move your picture, right? So look what they got in their back pocket. They got our dream fund. There is something out there, it's Max something, that's like a covered call of other ETFs, right? And I understand that it's easy to do a fund of funds, okay, and do all that nonsense because less regulatory, blah, blah, blah. But Round Hill, now I don't know if this is rumor or not, is coming out with a Mag 7 because the one that's out there now sucks, right? Because it's made up. If you have pieces of poo individually and you put them in a basket, Howard, you still have a basket of poo, right? So we're looking for a non-poo basket. Now, here's the thing. These guys are approved, but they're not releasing, if you can see at the very top, until April 9th. Why would they wait? Why would they not? Do they think that a bad market is going to come? Why would somebody wait until April 9th? What's your opinion as a fund manager? And then we get these turkeys off the screen. Go ahead.
well, it does take 75 days for a prospectus to be effective. So maybe they filed and they're expecting that date to be effective. I don't know. I have no prior knowledge. I'm just guessing here. So that might be it.
All right. So,
Yeah.
what about you? Where's your fund of funds? I mean, no, not, don't answer fund of funds yet. Are you thinking of a Mag 7?
We get that question a lot.
I know, everybody asks you that.
But the
Because
question
everybody
is,
wants it. Because the one out there starts with a Y, it ends with a G, and it sounds like a STD.
well, I guess
Look
the
at
question
your
is whether
face.
the market needs another one. But you know what? I might be, I just after this, I think I might be convinced to talk to the team and see if we can do something there. But we want to be a little bit different, right? Like,
I got different for
and
you, too. That's my next
yeah,
suggestion. But you go ahead. Go ahead first.
I think we just want a product that people can hold and not worry about. And so um,
And get high yield.
we we were hesitating because in some ways it's kind of better to hold Nvidia for the last 2, 3 years
Oh my
just to
God.
ride the
I wouldn't want that
appreciation.
now.
Yeah, but now actually the market is kind of trading sideways, especially with news
It's a
on
dying
deep.
fad.
It'd be interesting. You know what? Let me take it back, and I think we might reconsider it actually. We'll talk amongst ourselves and see what we can do.
I'm not
You
getting
know, to be
a room with you or anything to talk about it amongst ourselves.
honest,
All right. This is no
well,
J Diddy
K-Triple-Q was
situation.
supposed to be that. Yeah,
Don't invite
but
me to New York. Did you see that whole? I don't want to get into the clown show where they invited all the dumbest YouTubers to New York. Oh, it was like a freak off. But anyway, let me tell you what people really want that you can easily implement and give them the best of everything KURV has to offer. Okay, a flexible. You see, there's another company that has a universe of funds. Okay, and what they do is everything they make a lot of funds. It's like it's crazy. It's like bacteria multiplying. Every month there's 10 new funds. Okay, the shiny new object. Because all the funds lose money, so you gotta keep making new ones, right? So you guys have these great funds. You got your high yielders here, right? These are your high yielders, your single stock funds. Okay? You can make now the problem with their let's just call it what it is, YMAX, is that they have no mechanism in the prospectus to throw out the really bad losers, okay, that are decaying so bad because they have terrible underliers. You write whatever prospectus you want. Those prospectuses were written in what is now the Stone Age, okay? But look, you have these great funds. You can create a KMAG, a KMAX, okay? A KURV universe of funds, and guess what you create? A use case for KKK. A real use case. That
not
is.
KKK. K
Oh
triple
my
Q.
God, did I say that? I didn't mean that. I meant that's so bad, and I don't edit. KQQQ. I had to take. You know what reminds me of that? I don't know how much YouTube you watch. The cross-dresser on dividends, retire on dividends. You ever watch him? He's always
I
cold.
know.
Oh, he's always cold in the garage when I think he works for Yield Max. He's always cold in the garage when he reads all the holdings and everything. That's because he's dressed like a woman. But anyway, let's keep that out. The QQQ, the K, the Queen reminds me of him. He's a big YouTuber. He sucks. But KQQQ. We give it. It's now this thing is like almost. It doesn't hold underliers. Does it hold the stock or just covered calls?
It does hold the stock. It holds
Okay.
the 15 to 20 largest technology companies. Yeah.
Okay, that are only technology. All the other nonsense is out. Okay, it's just
Yeah.
technology. There's no Costco. There's none of that in there. Okay,
Yeah.
so that is your anchor. That's going to give you actual stock, unlike other covered call funds, right? It's going to give you actual stocks and everything and be like an anchor to give you growth. All of that's your Titans. Okay, let's call it Titans. QQK, whatever. I don't know what that is. It's a tongue
K
twister.
triple Q. K triple
Titans.
Q.
No, I don't like that. Okay, I don't like the double Q. I like Titans. Sounds manly. Okay, Titans. All right. So we put Titans together with all of these. These are your high payers. These are your yield whores, kind of, or your technology stocks. This could be your universe of funds. Okay, and then in your prospectus could be that you have the ability to add or remove any of your funds that you want. People would love this. This would offer yield, and it offer way more yield than the Titans alone. Okay, and the stability and capital appreciation of Titans. Plus, the fund can be buying shares of Titans. Okay, so it gives it a use case as a business person. Think of it. What do you think about this?
Are you looking for a job? Do you want to join the Curve team?
Let me tell you, if I ever made my own fund, because we go back to you guys trading instead of Neos, right? Anybody can make a fund nowadays. They have ETF in a box. Anybody can make a fund. I look at some of these clowns. This is why I don't interview anyone. But let's get back to this. Do you like this idea? Does it make sense as a fund for you, as a fund
I think a
manager?
fund with both stable income and then with a growth component is actually very attractive and compelling. Yeah.
So, what about this combination here? How do you feel about that? As
We
a, you don't have to commit, or you can just tell me how
yeah,
you feel as a person. Is it
it's
interesting? Is it
good. And
possible?
and
Is
I
it
think
insane?
uh, no, I don't think it's insane. I think it's actually quite sensible. And we have heard demand for it. So
Can you
I'm
back
kind of
test it? Can you back test it?
we can back test it.
Oh my
Yes, we have.
God, back test it. I'll let you come back on, okay, and tell me the results. If you back test this, I bet you're going to get yield and you're going to get stability. All of your things have NAV appreciation and yield, and it gives a real use case to the Titans. And if you don't limit yourself like YMAX did, right, where they can't get rid of the turkeys, if you ever come out, if you ever have a turkey in here, you can kick it out. Think about this. This is great. All right, you could call
We're
it
working out a
OMAX.
product on a we're working out a product on a YouTube channel, and then we'll see where it goes. This could
This
well,
is
um,
huge. This
yeah.
offers
Well,
everything, and you got it all
I
done
I will
already.
say I will say for sure I'm gonna bring this back to the team, and then we will chat about it, and then we'll give you an update for sure.
Okay, sounds good. Now, everybody wants you to do Palantir, okay, and they're pressuring you for more single stock funds. Before we even get into that, I noticed there's a fund company out there who I no longer have any vested interest in, okay? And by the way, this is not sponsored in any way. And he and I haven't really had much preamble before this. So this is really off the cuff, right? But they keep, I don't understand, and I'm so turned off. They keep introducing fund after fund after, and they all get dumped into that one that's the universe of all the funds. And they keep coming out with funds under new family names and funds and after funds after funds. Well, you don't do this, number one. I don't see that here. But why do they do this? What is the purpose as a fund manager? It's a business to you. Tell me why. What?
I really can't speak for other managers, but I'll say what we focus on is when we launch something, we want to be able to do the best we can, and if it has a benchmark, we want to be able to outperform the benchmark. And I think we also don't want too many funds because then we can't focus on any individual funds too much. So we want to focus on the funds that we have. So that's our philosophy, but
I love
other
it.
people can take other
Yeah,
approaches.
it's so great. And these funds, people had fear. I'm glad we talked about the volume, okay? Because people had fear about this, okay? And they should never let assets under management make deter them from a fund or make them go into a fund. Asset under management just means how good are the funds at being marketers? How much have they sold the funds to public? Okay, you guys, what really turns me on about KURV, and I've watched every interview before I decided to talk to you, everything, okay? You seem to be a real trader, not a marketer. And I noticed from all the marketing deficiencies you guys have, I hope from now on, okay, that you mail out, okay, the distributions timely. So Steve-O, you probably don't know him, okay? He looks ridiculous. Hold on, let me pull up a picture. So there are these YouTubers like Clowno, Steve-O, and everything, that they race every week to go ahead and announce the distributions. Did I just stumble across something? All right, so we understand that you're going to get the emailing of the distributions together, right? You're going to get it out in a timely manner, like maybe the morning of record date or something. You can work on that, can you? Just sending out the
Yes.
email. Yes.
So
Okay.
we heard the feedback, and we will be sending out distribution emails before market open so that people have that information.
Now I'm going to pull something out incredible. All right. No offense, but we used to call this the Chinese food menu. Okay? When YieldMax took all their funds and split them up. Now, you can't really take a single stock covered call fund, okay, and make it pay weekly, because the more frequent it pays, the harder it is for it to catch up no matter how much momentum, okay, and you're going to get NAV erosion. But what can be done is a group of stocks can still be monthly, but they can pay on different weeks. Yield Max did this. They listened to the community, and it really was groundbreaking. Howard, talk to me about this.
So we'd like to announce on this channel that we will be switching to a staggered distribution schedule amongst all 7 ETFs. And we try to be as thoughtful as we can. So if you take a look at the pairs, or there's 7, so there's one that's just, a single one for 1 week. The long-term distribution rate will be equal in each one of the weeks, so that you can get very consistent weekly income across pairs of the KURV ETFs. So this is exclusive on the channel. To get it's there's too much information to say this verbally, so you have to look at it, the emails and stuff. So we will send out an email, I think on Thursday, this Thursday on either on our subscription list or on X. We'll have a page that describes.
Let's show everybody right now on your page where to get on this list. Contact us.
Yes.
Okay.
Oh, yeah. You could do that.
Yes.
And then just put it down there. Yep.
Put in whatever you want. Put in other. They
whatever
don't care.
you want.
Okay. Organization name. Put Oracle so they all know you came from me. And this way we'll get the timely emails on distributions. And so tell us, so you're going to break these up into weekly payments. Let me pull up all your ETFs, all ETFs. So
yeah.
How is this going to go down? You said you're going to do it based on distribution, so it's an equal amount, because your competitor, 1 week you get this amount and 1 week you get that amount in let's say their Mag 7, because it's just not, it's a mess. So are you going to try to keep them stable? Explain more to me about this. And remember, most people are stupid, so like me, explain it in a simple way.
So I say long-term steady rates because, as I mentioned before, for the last few months, and probably we can't promise anything, but it looks like for the next few months, some funds will have elevated distribution because we were able to get so many, capital gains at the end of 2024. But long-term, you can see. So if you maybe go to strategies and you go to the yield under the drop down strategies.
All right, wait, let me just make your picture a little smaller so everyone can see. So I'm going to go up here to strategies. Yes.
Yeah, and then go to income strategies.
Okay.
On the drop. Yeah. So you can see, scroll down, you'll see kind of we charted the dollar per share distribution for each one of our funds on the left-hand column. If you keep scrolling down, you'll see it's pretty steady, right? And then there's some months in the last few months it's been higher. So the long-term steady, so what it was before we increased it, what we did was we paired each of the 2 ETFs together so that every week you have about like 2% monthly distribution. So if you multiply that by 12, it's about 24% a year. So we want to be as steady every single week in terms of distribution on the pair of funds that we have, so that people who are looking for steady income, they can use that to
so it's going to be about 2 different funds per week.
Correct. The one that will stand by itself is the Tesla one, because that generates generally more income, so that will be
we
one
have to
ETF
discuss Tesla. Before I let you go, we have to discuss your plans for earnings, but let's continue on this.
Sorry. If you want to get on the list, you see that button, subscribe list, just click on that and then put your email address. You'll get an email on that. On the right bottom corner of your screen.
Oh, right where your picture is, the big giant one. All right, hold on. All right. So yeah. All right, I see it. Everybody subscribe. All right, this way you could be smarter than all the dumb YouTubers that think they're telling you first what the distribution is going to be or what the information is going to be. All right, if you subscribe. Okay, and I love this website. I don't want to throw shade on Tesla, but they have a section here where they just beat the piss out of it. But let's not talk about that. Let's continue now with this. Okay, so I see all the different funds here. Okay, and when are you going to start doing these weekly?
That will be in the email. I think it's in a couple of weeks. We're doing it immediately. We're switching over. We just had a
Immediately,
distribution last week, so
right?
we need to wait a couple of weeks to, for the premiums to kind of accrue. But we'll do it pretty soon, and it will be in that email,
All
that
right. Well,
exact date.
you should owe me a lot of money for this, but since I like you guys, you don't owe me anything. What I'm going to tell you now is sheer genius. You need to send it out on the same time, okay, or at least the same morning that Yield Max and the other ones do it, so that you get into the promotion, the YouTube promotion machine. Okay, so let's say if Round Hill does them on Tuesdays, you can make your announcements on Tuesday mornings. Okay, and that could be a record date, and you pay out on Fridays. Or if you want to beat everybody else, oh my God, Howard, this is how you really pull a fast one. I know how the people think. I know the communities. Okay, so everybody's used to Round Hill and Yield Max, your only two competitors, which we're going to stomp now. Okay, they pay out on Fridays. So what if you did a record date, let's say on a Monday, and you beat them out and you were able to pay on a Wednesday or a Thursday each week? It's a different day, a different reason to buy your funds. I'm telling you, these people are
Yeah.
that dumb.
Will 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 so the reason why we made this change is because we heard all the feedback
Right.
from, everyone who gave us feedback. We're going to do this for the next 2 months in terms of setting a schedule. As we do this, please provide us more feedback so we can improve it if there's things
All
that
right.
needs to be improved.
Let me just tell you right now the feedback. Your competition pays everybody on Friday. They do record date and announcement either Tuesday morning or Wednesday morning. Okay? You could either be in the same group with them, okay, paying out on Friday, or you could give everybody else a different reason to buy your fund. Pay one day earlier, move back the record date one day earlier. Everybody will still cover you every week, and it gives people who are in Yield Max and Round Hill a payment on Thursday. XPay by Round Hill pays me on Thursday. It's the only one, the Thursday of the month. Everybody else, even the weekly ones, does it on Friday. It's just one different day. That one little tweak will make more people buy your fund. But going weekly alone, I don't care if you pay on Friday, I don't care what you do. But if you want to pay out on a different day, that'll give more people reasons to say, hey, I'm getting another check. People like XPay over XDTE for that sole reason. It pays out on an oddball day. Record day is on Tuesday, it pays out on Thursday. So it's just
Okay,
something to think about. So you're going
we'll take
weekly.
that feedback in. Yeah,
Yes.
because we want to make sure the mechanics and the operations of everything there's no issues with that, right? We
Whatever
want
is
the worst thing.
easiest.
Yeah, yeah, yeah. Okay.
So that's just something I wanted to tell you about. Now, all right, let's talk about the elephant in the room, freak factor. Okay, Elon Musk. Let's pull up TSLP. I used to trade earnings. Okay, that's why I bought a ton of your Netflix thing. I'm going to tell you, in crypto, I don't want to use. I want to keep this clean. All right, we call your kind of stocks, your ETFs, ghetto stocks. Okay, like if you can't afford $400 for a Tesla, you come over here and you get your ghetto Tesla. And there's even worse ghetto Teslas. We don't mean it as any kind of derogatory thing, but it's just, hey, I could get 1,000 shares of this. It's hard to get 1,000 shares as the average Joe of Tesla. So we call these ghetto stocks. We like them. And we like the dividends and all of that. You have been in several, I don't know what the hell's going to happen with Tesla earnings. I can look at Amazon and I can look at this earnings per share beat. They're probably going to beat again. Okay, this is how I know to where to move in and out. This is really critical. The momentum of where they're going. Okay, we have a freak stock here. Freak. Elon Musk could come out. They could have the worst earnings in the world. Okay, and their earnings. I don't want to pull it up now. I don't want to search. There. I mean, 2 earnings ago, I watched this thing fall the day before earnings and dump to $130. Okay? How now this thing, you guys have done phenomenal with it. Not this one. You've done phenomenal with it. How old is the fund? TSLP. How old is the fund?
It's about 15 months.
So you've seen several earnings reports. Okay? First question is, well, what are you going to do to prepare for earnings? What should we expect?
We have prepared for the earnings season. We generally, because of
And let me jump
a
in
two,
right there. Wait,
yeah,
before you finish your thought, and I'm really bad at interrupting people. I'm sorry. But it just makes for a great interview. And then people yell at me, why did you interrupt him? I'll let you finish. Okay, what I want to know is how you prepare for earnings, okay, versus your competition, because your competition seems to do absolutely nothing different around earnings. Yet I made a ton of money because you captured a lot of the upside of good earnings. Now, Tesla's a different animal. Nobody's been able to harness this beast but you. How have bad earnings affected the fund? How have good, well, I know how good earnings would affect the fund, but how have bad earnings in the past affected the funds? And what have you done strategically to prepare for earnings? Because I'm sure you're aware of the event. It's this Wednesday.
yeah. So we're approaching earnings seasons, when we have to roll our calls, we generally roll it a little bit more out of the money, because there might be essentially upside surprise for earnings, and we wanted to capture some, the price appreciation that I mentioned. Now, if earnings is bad, and the stocks falls, the you're actually we can reset that call to get some additional income, when if that happens. So we wanted to build in some conditionality in which where we write the call so that if it's upside surprise, we get the price appreciation, and then if it falls, then we can reset and clip some additional coupon. The other thing that we try to do is that around earnings seasons, implied volatility generally spikes, and especially this past quarter, we've seen implied vol, especially in Tesla, have increased quite a bit. So we roll opportunistically to get the higher volatility. In a cover call strategy, you're essentially harvesting the volatility premium. So when it spikes, we try to grab as much of that volatility for the fund as possible.
So that means that because of the excitement of Tesla earnings, that there's a possibility we might see maybe a share price reduction if they miss, but we might actually pick up better on the premium.
That's right. So those two levers, price return and income return, we're always kind of playing around with it to find the right balance to generate, to seek to maximize total return for the fund.
How
Yeah.
bad? I have about 4,000 shares, 3,800 shares. I can't sell them, okay? Because when Amazon, when I was in AMZ in the beginning, I knew they were going to miss earnings, okay, because of their dwindling EPS, and it was their first miss. I took a massive hit, okay, because I had a lot of shares. I have about 4,000 shares. I don't want to be trading in and out of this. If I sold it today, minus the dividend, I would be down because, again, today is just sheer brutality in the markets, okay? But if I sold it today, I'd probably be down about $8,000. I want to hold the share. Let me tell you, my thesis is I don't have to like the stock. I'm not a fan of Tesla. I hate the products. I don't believe in it. I don't care. But I don't have to eat it. It makes money. Okay? And all he's got to do, and I don't know if you might find this offensive, but he's got to come out with stories. He's going to give up free robots to people that are going to blow you at work and all kinds of stuff. Okay? Free robots for everybody. And the stock will go crazy, even if it's not true. So, how bad of an impact can we expect if we get a miss?
Um, I mean, I think there's certain other factors other than earnings. And I mean, for Tesla stock, it's really never been the story of just earnings. It's about
The
the
story.
personality.
Yeah, he's a
Yeah.
storyteller.
And now it seems like Elon Musk have some undue influence on American policy. That has also, I think, benefited the stock prices as well. So it's a bit of a complicated story, but that's actually the beauty of looking at volatility because you don't necessarily need to be right in the outcome. You just need the volatility to implied vol to actually go up.
And it's
So
go ahead.
yeah, so we're kind of built for both. You know, we wrote our strike a little farther out. If it's positive news, we get price appreciation. And as I mentioned, if it disappoints, then we can restrike it and get some additional
But
premiums
we're gonna
in the
we're
fund.
gonna take a hit. We might take a $7 share hit if they really miss bad, something like that. I mean, look, this is upset. Oh, that's over the year. I don't know. I mean, maybe a $3-4 hit or something like that. It's hard for you to say. I'm not
I
asking you to. We're
yeah,
not
so
gonna
so so
trade
this
based
is
on
the
this.
but this is the actually the thing is that um you know we are a little bit longer than we would because the call is higher,
Yeah.
the strike is higher, but the beta for the exposure is actually still lower than one. So if Tesla stocks fall 1%, that the fund should still actually fall less than 1%. So you get actually some cushion from a covered call strategies here.
Man, I hope he tells good stories. I hope he tells good stories. Even if they miss on earnings, all he's got to do is promise the world and everybody will believe him. That's the genius of this stock. My channel, I was going to make a channel called Shorting Tesla Daily because I used to short the piss out of it. I'd make like $31,000 in an hour. It was before the split. And then, if you can't beat him, join him. Okay, he got me 2 earnings ago, right? The day before earnings, it dropped to $130. I said, somebody knows something, they're going to miss earnings. I went all in. He hit me for like 50 grand. I was like, got beat by a billionaire. All right, so let's talk about what else is coming up. All right, I think I hold AMZP. I sold my YMAX and I took my $13,000 worth of profit from I call it profit ripping. If I invest $125,000 with you, I don't care about the amount of shares. If there's $13,000 more because of an event, I'm going to pull that off the table. And look, a day like today where everything is down, even though your NFLP is doing great. What's the plan for Amazon? I think they're going to beat earnings. I got AMZP. Okay. What's the plan for this? Same thing? You
Yeah, I
expecting it to
think
move up? You're
correct. We
Tell
we
me.
generally think right now, still the companies that are helping to build the AI infrastructure, and that's in the form of either chips or cloud computing. So in Amazon's case, AWS, we think those will generally be pretty positive in terms of earnings. So
Yeah.
so we have a good outlook for Amazon. Yeah.
Okay, so it looks to. Oh, I noticed something else too. Your dividends have gone up more, and it's not the end of the year special. I would think that the beginning of the year, January, okay, someone the way you take this conservative approach, okay, which is really not as conservative because you're paying great yields. People are fooled by that. They don't want to invest with you because I told you it's the poor people's paradox. Okay, they're like, oh, that's not enough yield, or oh, it's too expensive. It's too expensive because you're growing the NAV. You care about investors' funds. That's why we're here. So, oh my God, sometimes I talk so much I lost my train of thought. All right, I don't know. What else? So we're going to go weekly. It's going to happen soon. Everybody's going to get an email. Okay. We want to beat the competition. You're more than happy to come back. What do you want to add? What did I miss? What do you want to talk about? Let's go back. I know you like your Queens or KQQQ. I want to give it a better use case. I'll just tell you, people don't like it because they don't want 15 cents a month. It's a new paradigm where we look at that as it's like spitting in my wallet.
Yeah, I would just say that we can never compete on yield, but we want to be here for the long term.
How can you say
So
that? You are competing. You did a dollar
our
five.
headline yields is always lower, but that's because,
It's
you
because you're
know,
honest. It's not your fault. You,
we want to make sure that we're able to generate consistent income. And I have to say I came into this without really knowing that the income focused investing community. And we are actually ourselves have learned a lot in terms of how you guys use these funds, what you're looking for. And we are actually consistently trying to improve the funds as well, in terms of the quality of the distribution and how we generate income. But we don't want to be a fad. So we're running the fund as if it's going to be here for the next 3, 5, 10 years. So, for those of us, and I have to say, in the beginning, we're preaching philosophy, investment philosophy, and it does take some investors trusted us and put money in it initially. And we're hoping, now we have a track record to show that our philosophy has data behind it, right? So you can actually see what we've done, and that's proven out to be true. And so we're not going to go crazy. We're going to be consistent. We want to be fiduciaries of your capital. Our job is not to lose money for you. We're constantly, sometimes it's out of our control, but we seek to, meet the investment objective that we have out there. And so thanks for the trust, and we will continue to try to do as better over time as well. So
This was really really great. Um, we love the fact that you're not shoving new funds down our throat. You know that you're sticking with what works, and it's just been a fabulous interview. And I'm gonna thank you privately, but let's just say goodbye to everybody on YouTube. I think this will be great. They're going to be super excited, and I hope your volume grows, and I can't wait to see your new fund that I created. Oh, you should let me just tell you one other idea. Okay, they're going to tell you Palantir and all of that. Okay, we have a new administration that's America first. Okay, you don't want just Palantir. You want to work AI in there. Okay, so companies like Palantir or some of the other like quantum computer, you may want to do a sector-based ETF that is defense AI. Not Northrop and not that garbage old world nonsense. I mean like Palantir and a few of the other high flyers. Okay, and the sector could be, and AI, is really big right now, but this would be defense AI, which is huge.
I've now heard it twice, so that I have to jot that on my list.
That's a
Yep.
different one. That's a new one. But anyway, it was great talking to you, Howard. I hope everybody takes a look at Curve. None of this was financial advice, but we're going weekly. Get ready, everyone. Subscribe, and you're welcome to come back if there are new things you ever want to talk about or whatever. And it was an absolute pleasure, Howard.
Great. Thank you. Thank you for the community. Thank you for this interview. We will hopefully more news that everybody likes coming soon in a couple of days.
Thank you so much.